Welcome, curious minds, to the deep dives. Today, we're really going to focus in. We're taking a close look at the S&P 500 index. Forget the headlines for a bit. We want to understand what the technical signals, the charts, are actually telling us.
Exactly.
Our goal here is simple. Cut through the noise, find those key insights, and help you feel, properly informed about where the market stands right now.
And technical analysis is perfect for that, isn't it? It's like reading the market's own language. You look at price action, patterns, indicators. It tells a story.
The market's body language, you could say?
That's a good way to put it. And we'll look at different time frames, get the whole picture, long-term, short-term, see the trends, but also maybe some warning signs.
All right, let's unpack this then. And we should probably start with the biggest picture, the monthly time frame. What's the S&P 500 telling us from way up there? Any big trends jumping out?
Oh, absolutely. From the monthly view, the main story is, it's a very strong bullish trend, no question. You see those classic higher highs and higher lows consistently.
Right, the basic building blocks.
Exactly. It shows real strength, real buyer conviction over the long haul, not just a quick bounce. Right now, the index is around $6,495, give or take.
Okay, strong trend, that's clear. But even when things look this good, there are usually some subtleties, right? Things investors need to watch.
Always. And what's really interesting here, I think, is how it's been trending up. Since March 2020, believe it or not, the price has been trading inside this pattern called a rising wedge.
A rising wedge, okay.
Yeah, and it's a multi-year one. It's been respecting both the top and bottom lines of this wedge pretty closely.
And typically a rising wedge, that's usually seen as a bit cautionary, isn't it? Suggests weakening momentum.
That's the textbook definition, yeah. It often acts as a bearish reversal pattern. But here's the thing, it's been respecting it for so long while still pushing higher. It suggests the bulls are really fighting within this structure. And importantly, the price is still above the monthly 21 EMA, the exponential moving average. That's still a bullish sign underneath.
So, bullish trend, but inside a pattern that often spells trouble. Interesting tension. Now, I remember back in April 2025, there was that dip, that pullback. It looked like a blip. Trend resumed pretty fast. But was there anything under the surface there? Something maybe signaling more?
You're pointing to a key moment. April 2025, we saw what technical analysts call a strong rejection candle on the monthly chart.
Okay, what does that look like?
Typically a long wick or shadow sticking out the top. It means buyers pushed prices way up during the month, but sellers came in hard and pushed it back down before the month closed. Shows significant selling pressure up high. But here's where it gets really fascinating. Even though the price went up after that rejection, the RSI, the Relative Strength Index, was telling a different story.
So?
It was showing strong bearish divergence.
Bearish divergence. Okay, break that down. What does that actually mean for someone watching the market?
Well, think of it like this. The price of the S&P 500 is making new highs, right? Going up. But the RSI, which measures the momentum, the strength behind those moves, is making lower highs.
Ah, okay. So the upward moves are getting less forceful. Less conviction behind them.
Precisely. The engine isn't revving as high, even though the car is still moving forward, maybe even faster for a moment. It's a classic warning sign. It suggests the underlying buying power is fading, potentially.
Even within a strong trend.
Especially within a strong trend. It's often a precursor to a correction or even a bigger reversal down the line, the market whispering a warning.
That's a really key point, the market's whisper. So we've got this strong long-term trend, but these monthly warning signs. Let's zoom in a bit. How does that April 2025 period look on the weekly chart? Did it confirm the warning, or did it just look like strong support holding up?
Good question. Looking weekly, that April 2025 zone really solidified itself as important. First, it clearly marked a higher low. That's bullish, technically. Yeah. Buyers stepped in before the previous low was tested.
Okay.
And second, that whole area acted as a strong demand zone.
Demand zone meaning? Lots of buyers were waiting there.
Essentially, yes. It's a price level where, historically, or based on chart structure, you expect a concentration of buy orders. It acts like a floor, providing support.
And I recall there was something about the volume around that time, too.
Yes, that's critical. We saw an ultra-high volume weekly candle right in that demand zone during that period.
Ultra-high volume, so not just average trading.
Not at all. This points towards big players, institutional money. When you see that kind of volume surge in a key demand area, it strongly suggests large institutions were buying aggressively, absorbing selling pressure.
Got it. So that adds weight to the support level, makes it more credible.
Absolutely. It reinforces the idea that the pullback was met with significant buying power, allowing the trend to continue.
Okay, so the weekly view confirms the bullish trend continuation, backed by serious buying. But what about that bearish divergence we saw on the monthly RSI? Did that show up on the weekly too? Or was it just a monthly signal?
No, and this is important. If we connect this to the bigger picture, yes, the bearish divergence is confirmed on the weekly RSI as well.
Interesting. So it wasn't just a blip on one time frame.
Correct. Seeing it on both the monthly and weekly charts really strengthens the cautionary signal. It's not just noise. It suggests this weakening momentum isn't just a short-term thing, but maybe a more underlying developing issue, even while the price itself keeps climbing.
So the trend is strong, but the warning signs are consistent across timeframes.
Exactly. And, the index is still above its weekly 21 EMA, which is supportive, but it's also right now bumping up against the upper trend line of that big monthly rising wedge we talked about earlier.
So it's at a really critical point, testing that long-term boundary.
Very critical juncture, yes. Could see a strong reaction here.
Okay, let's bring it right down to the present day then, the daily chart. What's the immediate action looking like? I heard there's another pattern in play.
That's right. On the daily time frame, the price is currently trading inside another rising wedge pattern.
Another one, so a smaller one inside the big monthly one.
Exactly. It's overlapping, nested within the larger monthly wedge.
Wow. What does that overlapping structure mean? Does it just make things more complicated, or does it amplify the signal?
Well, I'd say it amplifies the tension. Think of it like coiling two springs, one inside the other. The big monthly one has been building pressure for years. Now this daily one is adding immediate, more intense compression right near the top boundary of the monthly one.
So it potentially sets up a sharper move.
It certainly increases the potential for a swift, decisive breakout, either a strong push higher, defying the pattern's usual implications, or potentially a sharp move lower if that internal pressure breaks down.
It really highlights the indecision, doesn't it? Even with the overall trend still up.
It does. It raises that important question. How much tighter can these springs coil before something gives?
Okay, so given all this layering, monthly trend, weekly confirmation, but divergence, daily wedge, inside the monthly wedge, what are the immediate scenarios? Like in the next few days or weeks, what are the key levels telling us? What are the two main paths?
All right, looking purely at the technicals right now, there are two clear potentials to watch very closely. First, the upside. If the bullish momentum just keeps going, pushes through this resistance, then the index could realistically test what we often call a psychological resistance zone. That's roughly between $6,550 and $6,570.
Psychological resistance, because they're round numbers.
Yes.
Or is there more to it?
Partly the round numbers, yes. People tend to anchor to them. But also, a lot of automated trading systems, algorithms are often programmed with orders around these kinds of levels. Getting through that zone, especially since it coincides with the top of the monthly wedge, would be a significant show of strength. A real test.
Okay, that's the potential upside test. What about the downside? If these wedges and divergences start to bite, what level is critical?
The key level to watch on the downside, short term, is $6,350. If the price breaks and closes below $6,350 on a daily basis, that would be a warning sign.
A close below is more significant than just dipping below during the day.
Generally, yes. A close below suggests sellers maintained control until the end of the trading session. Such a break could signal a decline towards the next significant area of potential support, which looks like the $6,230 demand zone.
Similar to that April 2025 zone we discussed.
Similar concept, yes. An area where we'd anticipate buyers might try to step in and support the price, but a break below $6,350 would definitely shift the immediate sentiment more cautiously.
Right. So let's try and sum this all up for everyone listening. It feels like, well, bit of a contradiction, doesn't it?
Yeah.
We have this undeniably strong bullish trend playing out over months, even years. Higher highs, higher lows. But at the same time, these persistent warning signs keep popping up, the bearish divergences on multiple time frames, these rising wedge patterns.
That's the core tension, exactly. You have the clear dominant uptrend price is above key moving averages on the monthly and weekly. That's the primary signal. You don't fight the trend lightly. But you absolutely cannot ignore the bearish RSI divergences on both timeframes, plus these overlapping wedges. They're telling us that the quality or the strength of that uptrend might be weakening internally.
Strength on the surface, potential vulnerability underneath.
That's a good way to summarize it. It's nuanced. It means being aware of both narratives simultaneously. Being informed isn't about picking one side, it's about understanding the full picture, including the conflicts.
Okay, so the key takeaway for you listening is this.
Yeah.
The S&P 500. Definitely in a powerful bull run. That's clear from the big picture. But And it's a significant but. It's also showing these consistent caution flags, those bearish RSI divergences, monthly and weekly, the tightening wedge patterns, and we've got those immediate levels to watch. Potential resistance around $6,570, and potential trouble if we close below $6,350, looking towards $6,230 support.
And knowing this allows you to approach the market more strategically. It's not about being purely optimistic or pessimistic. It's about understanding the balance. How do you weigh that strong trend signal against these early warnings? It prepares you mentally for different outcomes. Maybe the trend powers through. Maybe it needs to pull back and consolidate that energy.
Understanding the market's body language, as you said earlier.
Precisely. The market tells its story. You just need to listen carefully to all parts of it.
Really insightful. So here's something to think about as we wrap up. How do you navigate this kind of market? One that's clearly strong but sending these subtle cautionary signals. What clues will you be watching most closely now? For more deep dives like this, digging into market insights and analysis, make sure you subscribe to Investor's Edge, and hey, give this video a like if you found it helpful. We'll catch you on the next deep dive.